Hello everyone, hope you are doing great. So in this video I will show you some traps about the entry that you can avoid in your trading, and after seeing those traps we will go through the flip entry and how to maximize your probabilities into your flip entry. So now that we see how we can enter in the market, it's nice to know some traps that we can avoid when we are taking position. As smart money trader, we are also subject to a trap that can happen when we are taking position following our rules. So for the first example here, let's get for the example that we are bearish. Okay, we are in a bearish market and price comes back into an M15 order block. So price comes back into the order block. Price gives us our change of character, so it creates another block in 1 minute time frame. And let's say that the price here will come back in the leg, but will not come back into the other block, and after will break the structure. So what most people will do in this case, most people will put another block here which is valid because of the break of structure. We'll put another block and we'll take an entry at this point just here. And what price usually do in those cases, price is usually building liquidity for the other block that we have higher. So price will usually at this level come back and maybe mitigate the level, gives a little bit in the market, and after price will go deeper and higher in the leg and will mitigate the extreme order block. And with the mitigation of the extreme order block, price would have created a lot of liquidity here and a lot of liquidity there. So when you are seeing something like that, don't be too greedy, okay? Don't be upset. Just wait for the price to sweep your liquidity, and if you don't get into the trade, it's not a problem, okay? Because it's better to maximize the probabilities that to get into every trade and have a very bad win rate and being afraid of the market because you don't know what the price will do. So sometimes price will surely goes down after tapping into this level, but maybe we don't have any imbalance into this leg, and that's why price is doing that. But that's not the question here. So this is a trap that you can avoid and that you will find everywhere on the market. So I will show you now an example of this trap. Okay, let's get for the first example here on the EU. So here price comes back into an M15 demand. We are in a bullish order flow into the M15 time frame. So here my church will be at this point here, but I will mark the church just here up. And so the church will be here. Okay, now we play the price. Okay, here price comes back here and made a change of character. So we have this other block, which is the extreme. Okay, and for now here, so we made a church. So here we have already some liquidity for the price. But price break the structure with this one, so it's valid to use this other block. Okay, price comes back, mitigates it, breaks a little bit structure, so price is creating liquidity here. So our position will be on the extreme. okay, because we want to sweep liquidity up. Okay, we play the price a little bit, so price react from this one, which most people will follow. Okay, price sweeps, react from this one, start to break some structure, price sweeps another time, price induce people here, some people will here market touch like that and take a position in this area, but we know that it's just liquidity for the level below. Price comes back, sweep all the liquidity, and after price goes up. So that's some traps that you can avoid, because here you can see that the price is very noisy, and here price sweeps liquidity, and after the sweep of the liquidity we have the big pump after sweeping all of the liquidity, and we took sell side liquidity, enter into the trade, and after we take buy side liquidity, and following higher time frame you can make some good profits. So that's some traps that you can avoid into your trading, because a lot of people are greedy and putting a lot of position on this kind of order block. I don't get every time into my trade, okay, but when I'm into my trade, I know that I swept a lot of liquidity, and I'm totally neutral by taking a trade with a stressful question like, oh yes, but I have some imbalance below, I have resting liquidity, I have still another block below, I don't know which one to take. Now I know that I want to be in the best probability setup, so I want to sweep liquidity and I want to take the extreme. But now I will show you the flip entry and how you can use a nice flip entry. Okay everyone, now we will go to see what is a flip, and after we will go through some real example into the real market. So what's a flip? So when the market is in a trend, we have either demand or supply in control. When price reacts from one of it, fails to create new structure, and after break the last zone in control, we have a flip from supply to demand or vice versa depending on the trend. In a bullish market, we will have demand in control of the market. When price come back to a demand, react from it, fails to make a higher high and break the demand, it creates a new zone, the supply that flipped the demand. And we can use this zone to follow the market. So let's make the example here. So we are coming back into an M15 order block just here, and we are in M1 here, so we are putting higher high and higher low. And so at this point here we break structure from there. So here we have a demand where price should react. We tap into the M15 order block, we come back into the M1 order block, we react from it. This is a must to have. You need to react from the zone you want to see a flip. You need absolutely a reaction. In the other case, it's just not a zone that you can use for this one. After the reaction, it fails to make a new structure, so it fails to break this high, and after it breaks the last demand in control and creates a supply by breaking the last demand in control and also making a touch. And after, we will be able to follow the supply that flip the demand. But as I told you before in this video, price will usually use this kind of lever for liquidity for the price to come back into an higher order block before going down. So when you have a flip like that, you can use this entry or you can use this entry. But if you want to take the extreme, you keep the extreme every time, and if you want to keep the flip area, you keep the flip area every time. And by doing that, you will keep your probabilities, and you will not jungle into the probabilities and make some wrong thing. You will just do the same stuff every time. But now we will see how we can see to have some better flip and to have some better zone and to avoid to miss some trades. Okay, let's get for the example. I will just make a new M15 supply and a new structure to show you some example where you can use the flip and not necessarily the extreme one. So here I will make a trend. Wrong tool, sorry. Okay. Okay, so let's get for the example here. So we tap into the demand, we fail to make a new higher high, we break the demand to the downside. And after here, if price is creating some sort of liquidity, equal highs or trendline liquidity or high liquidity, something like that, you will be able to use this liquidity as inducement for your flip order block, and you will be able to use the flip one without any stress because you already swept some liquidity into the price. I will just mark well all of this. By creating some liquidity, it induces people and creates a lot of orders, so price doesn't need necessarily to come back and fill the imbalance to take the extreme one. So let's get in another example. I will go into the right on my chart, yes. So for example, we are coming back into an M15 supply another time. It's the same for demand, guys. It's just here I just show you the example with the supply, but it's literally the same. So here same, we tap into the M15 supply, we react from the last demand in control, we fail to make a higher high, we come back lower, and after we sweep that liquidity before breaking the demand and making a touch. And so with doing that, you will be able to find the same model of the touch but in a flip zone. And by doing that, price, just like here, swept some liquidity, and now you are able to use this one with more confluence and with less stress. Okay, so now we see all of those models, guys. So this model works, okay, this model works, but I don't use it when I don't have inducement or liquidity, because as I told you in the beginning of this video, most of the time price, even if we have a flip, price will take this one as a smart money trap or as liquidity and will sweep this one and take the extreme before going lower. So that's why I'm always waiting for inducement or a touch, if I can do that like that, a touch into this area, not necessarily a touch but a sweep of liquidity. So okay, now we see all of that, guys. I will show you an example into the real market. Okay everyone, so here we are for an example into the EURUSD. So we are approaching an M15 level, so let's get an example. So okay, price is coming back into the order block, so let's wait for the price to touch this one. Okay, price touch the order block at this point of the market, so we have some supply above this level, but as you can see, supply has been used to break the low, so I will not use this one. So here I will use this supply, because this is the last one before we break the structure, and let's see what the price will do. So okay, here as you can see, even if I take this one, even if I take the whole one here, as you can see, price flip the supply without any reaction. So what can I see in this case? What will I do? Sorry, I will wait the next one. So this one breaks structure to the downside, so I will use this one for my supply to flip, or wait for the price to coming back and create a new supply. Okay, price react. Okay, price react here, make a new low. So I will delete this one and I will delete this one, because now the last supply is in control is this one. Let's see what the price is doing now. Okay, perfect. We have a little sweep here to the downside, but I will not count it as a valid supply because I want beautiful stuff to have a flip. Okay, I like shush like that, but to have a flip I prefer some more valuable stuff and some more visible stuff. So let's see if we get a reaction. Okay, we get a reaction. So okay, price makes a new low, failed to make a lower low. Okay, so we have this demand which flip the supply. Now in my case I will use this as liquidity if I don't have any liquidity building here. If I have some liquidity building, I will take this one. But if price come back very deep lie with big candle, I will wait for the price to sweep and take this one, because as you can see we have this extreme where price reacts a little bit. I think price touched this one a little bit. Yes, a little bit, but following my rules, price can coming back and mitigate the 50%. So I will wait to see if price is creating some liquidity. Okay, so price now is building some liquidity, so I can use this level. We have some inducement here, building trendline liquidity, sweep trendline liquidity, so I can take another on this one. Oh, sorry, I can use it like that. Up. And after, if we have maybe an M15 supply demand or something like that, we can join this, but this is not the topic of this video. So let's play the price and let's see how it reacts. Okay, so we have a nice reaction. So as you can see here, we have this, and we have this as a judge that we can use potentially. Okay, but price is going without us. So okay, so here now we see a flip entry. So we have price making a lower low, price react from the supply that makes a lower low, fail to make a new low, break the last supply in control, build some liquidity that I can use as inducement for my demand, so I can use the demand that flipped the supply. And as you can see, it's a very powerful entry because you use the name, the flip, when price start to switch from supply to demand or vice versa. So it's a very nice entry, and you can add this to your church entry, because a flip and a church is not exactly the same. Okay, a church concerns the structure and a flip concerns the supply and demand. Okay everyone, I hope this video helps you understanding the flip entry. So I will make a further video at the next of this course about how to find some zone with the flip, okay? But for now, just build your data with the flip entry, okay? And try it by your own. You can, as always, ask me a question in private or in the Discord, okay? And see you on the next video, guys. Bye bye.